Yeah, that's fine.
No, I think I'm good.
Yep, that's fine.
No, I think I'm good.
Yep. Okay, so the YouTube is live now, and Amanda's in here. We're going to go ahead and get started. I'm sure other people will start showing up. So, hello, everybody. My name is Dan Jones with Jones Business Management and Growth Consultants. This is our weekly free webinar. I would like to welcome the guests, Duncan Gregory, who is in the insurance industry. And in a moment, I will give a little bit better introduction and turn the floor over to him to talk about himself. We are live on YouTube, and you are welcome to leave comments and questions for Duncan for us to cover later into the meeting. And if you are in the Zoom chat through our Facebook group, just leave your comments in the comment section and I will address them as we go further. So without further ado, welcome, Duncan. How you doing
Hi,
today?
I appreciate being here. Thanks for having me, and I hope to have a productive meeting here.
Yeah, me too. Me too. So, why don't you tell us a little bit about your insurance background? For starters, how'd you get into insurance?
It is, well, that's an interesting question. I had an initial meeting with my car insurance uh agent at the time who liked the cut of my jib, thought we had a good conversation, and invited me into his office. And I started working for him. That was State Farm. That's going on 8 years ago now. Time
Oh, wow.
flies. Yeah,
Yeah.
so it's been a while. Got licensed real quick. Been doing this for a long time, and I'm licensed in property, casualty, life, health, anything under the sun. I can do it, but I'm also a professional work comp advisor.
Okay. Well, work comp is one of those areas we're definitely going to want to discuss here tonight. So, okay, why don't we start with the most pressing question for are the viewers that are watching now and also the ones who will watch later. I see this so frequently on the free groups for landscaping with landscapers, new guys wondering what they need for coverage, and then being advised by people that maybe have a little bit more experience. You know, and this is what the way it'll happen. They'll be like, "Oh man, I just, looked at what insurance would be for my truck, to put my truck on business insurance, and it's this astronomical amount." And then they'll be told by somebody, "I'll just keep it on your personal." And
Uh,
and I
Go
want
ahead.
to I
I'm ready
want to
to
get
jump
your
in
take
there.
because I've got my own take on this, right? And
Yeah.
and but I want to hear your take on it.
Just from your tone, I think we have the same take, and that's why I was
Good.
ready to jump in there. It is never a good idea, 0 times out of 100, to keep your business policy on your personal policy, or to forego business policy entirely, whether it is the business auto like that or anything else. When people say, "I have homeowners insurance, I should be covered for this. I have health care, I should be covered for this,"
Right.
that nothing in your personal life should be used to cover your business, whether it's a price-based decision that you're going on that with, or you're just rolling the dice and hoping something doesn't happen. We call that self-insuring. It is not a good idea when it comes to your business in any regard, especially auto. That's something where you can't control what's going to happen out there on the road. You could be the world's best driver, but you could have some 16-year-old kid that is their first time out, and that's just not a good time. So
Right.
I fully encourage people to go with the business side of things,
Well,
and price
what would happen
is a
if they
huge
don't?
factor.
I mean, let's look at a worst case scenario, right? Because, everybody will always have the story, well, this happened to me and nothing happened, but, so you'll be fine. That's anecdotal. You deal in far more insurance issues for people than the guy on the street telling a story that happened to him or happened to a friend of his. In your experience, what usually happens to the people that have the wrong type insurance on their don't have the right type insurance on their business and say an auto accident happens?
Those lucky stories are a dime a dozen on the internet, it seems. And when people think, what's the worst case scenario that can happen? That's probably the most common thing. Your claim won't be covered, whether it is a medical, it is a car physical damage, it is damage to a building. The range can vary a lot with what can happen with an auto, but it is your claim being denied. You file it and you go, you look at your policy, I should be covered for this. But then these insurance adjusters, the people that deal with the claims, will do a little bit of digging and a lot of bit of digging. They'll look on your website and see the services you offer. They'll look at your trailer and see the equipment you have. They'll say, wait a second, why do you have three lawnmowers in your trailer if it's just your personal lawnmowers?
Right.
Why do you have three lawnmowers?
Right.
And then they use your email address to look you up online. And I'm surprised not to just what they can find, but how quickly they can find it. Within 24 hours, they'll say, oh, you have a business and this is what it is. Your claim's denied. It's something called material misrepresentation. When they know that you're trying to get away with something, they'll find it really quickly.
Yeah. And there's really no appeal process for that, is there?
No, it's something where they like to throw the bells and whistles on and say, "Hey, you can appeal any claim denial,"
Right.
but the appeal will go just the same way that the initial claim went. They'll say, "Okay, well, give us your evidence that this wasn't the business." It'll be up to you to prove your own innocence at that point.
Right.
And if you're not innocent, if you do have a business, then it's something where you're getting even deeper into water that you didn't want to be in the first place.
Yeah. Yep. Well, you and I are definitely 100% in agreement because on those three groups, I'll be like, whoa, whoa, don't listen to this, schmuck over here. He doesn't know what he's talking about. It's just bad advice. And, we're gonna get into the different types of insurance. And for viewers who may watch this who aren't necessarily in the landscaping industry, but in the home services industry, a lot of these very same policies apply to you the same way that they would to landscapers. And the reason I say that is that home service industries are very personnel labor intensive businesses. So liability insurance is very important, and I'll come to a story about that in just a second. And your work comp. These are probably two of your most important insurances. Your liability insurance, you should be carrying it even if you're not working on commercial property. See, most residential properties aren't going to ask you for liability, and if they do, they don't understand what the minimums are or how things have to be stacked out. Commercial properties do, but you need to understand how your liability covers you. And now here's a story I'm going to tell you. There was a company that I was helping a couple of years ago, and they were dropping deliveries off at a property that they were doing major landscaping and hardscaping in the backyard for. The the rug floor mat shifted, stuck the gas pedal down. The truck jumped these people's garden wall and flew into their front porch and the front right corner of their house and totally demolished it.
Wow.
Yeah. So the liability insurance covered it. And to the benefit of the guy that owned that company, the customers liked him so much that when they got the insurance to agree to pay for the repairs, that went like his insurance company told them what they were going to pay. They just turned around and gave him the money back to fix everything on the house because he had a contractor's license. So it worked out for him in a
Yeah.
rather weird way. But had he not had that insurance, right? And this was a residential job. Had he not had that insurance, what would have happened? Because that was tens of thousands of dollars worth of damage that was done. And I can remember starting out very early on. I broke the glass on French doors
Okay.
with weed eater. Just one tiny little pebble, well, two probably, because it hit both windows and just spidered them. And
Yeah.
and it was a very expensive glass. I mean, the repair work on it, was like over $900, and this is back in the early 2000s. Thank God for my insurance, right? Because I was a new dad, at that point, and I was counting, every penny. So insurance saved me, having to pay that. Okay, so that's my monologue. Why don't you run, the landscapers and the home service industries through some of the insurances that are important for them to have for their business?
Okay. Well, I'm glad you mentioned that story, but that's for every time that you have that, it seems like there's three, five, 10 other stories where it doesn't work out that way, whether they think they're covered for something and they're not, or there's a conflict between multiple insurances and they both decide that they're not going to cover it. It's those are the ones that stick with me more often, that the claim is denied or they don't even have coverage there in the first place. So there, you hit the nail on the head with the two main ones. General liability is the one that everyone's familiar with. That's what covers the business. That's the kind of head of the insurance. Down from there, your workers' comp, that's the injury stuff. That is the damage to the people, or the general liability is the damage to the property, whether that's yours, somebody else's. The general liability covers property, workers' comp covers the people. And from there on, it's the ones that people are less familiar with. Maybe they've heard of, maybe they've considered, maybe they've been quoted on them, but it's something that they're not necessarily that deep in themselves. The first one is commercial auto. That's something where people say, "Hey, they'll have it on the side of their truck, licensed and bonded. I have what I need." They'll have their general liability. They probably have workers' comp. They might not have the business auto because they think, "Hey, I have personal auto insurance. That means I'm licensed. I have this for what I need. I'm covered."
Yeah.
uh, you're probably not if you haven't disclosed that to your agent. Some personal auto policies, when I worked at State Farm, they'll let maybe 10% work usage on there happen, but they're you're not writing that into the policy. So having business auto coverage, like you said, typically more expensive, but that's also there's other things that come along with it, that you're covering multiple drivers in your fleet. You're covering vehicles that are more expensive than the average vehicle. And something that's very common, especially for a lot of these landscapers, are contract minimums, where they say you have to have this specific level of auto coverage is a common one, general liability coverage. These limits need to match what these contracts are asking for. Whether that's something you've been doing contracts for years, or you go, you know what, we've been doing pretty well these last few years. I'm ready to go after some of these bigger contracts. And then you get this bid and they go, oh no, we don't have any of these coverages. You call your agent and they're like, yeah, I can get that done for you. It might be a week, and they go, oh no, the bids go out today. I need it to be done today. And you don't want somebody, you don't want a quote that can be done in a day. You want somebody who hears the needs of your business and can do that. Look like you were about to say something.
Well, yeah, I wanted to kind of segue this into, the people in my group who read, about like overhead expenditures and stuff, and my mentees also, anybody that's hearing this in the future, if you're putting together a bid on a commercial property, probably one of the first questions you should be asking is what limits on the liability they're going to want. Because if you're carrying 1 mil and they request two, now I just saw somebody the other day that said that he was asked to carry 3 mil after he'd already done his estimate. Well, guess what? Your overhead has now changed entirely for the year. And
Yes.
and you're going to have to come up with a good chunk of that increase, at least I think 25%, depending on your credit a lot of times too. But you're going to have to come up with that. So if you're putting a bid together based on a 1 mil or a 2 mil pile, and then all of a sudden now they're requesting three or four, well, your numbers aren't going to work.
Yeah, your insurance costs will double overnight, essentially, while the contract is worth it. And I do recommend people going after their bigger jobs if they're prepared to do that, because the money can be good. You need to think about those costs beforehand, because a lot of them will have minimum down payments. 25% is really common nowadays. And as inflation goes up, these insurance costs are going up because the flip side of the insurance is these supply chain issues, these materials, the labor to get your car repaired, to replace property, and to medical expenses. All those costs go up, which means the insurance costs are going up. So you go, hey, I quoted 5 years ago. Those prices might not be the same now. And when you're ready to cut and move fast, it's not going to be something that's as easy to fly by the seat of your pants and go, I know what I'm in for.
And for anybody who's listening, that's like, oh, how does that make sense? $1 million policy is $1 million policy. That's true, but that $1 million policy is buying less as the prices go up, right?
Yes.
So if you weren't following that tracking on that logic, a $30,000 hospital visit is now 60,000. Yes, you're maxed at 1 million, but the way insurance industries run with actuaries and all this other stuff is they usually know what is the average car accident. They can usually tell you. You could call an insurance agent the actuaries, and you can say to them, how many accidents are going to happen in Baltimore today? And they can usually tell you very accurately there'll be 5 car accidents, 1 fatality, two of the vehicles will be totaled, another one will run $15,000 in repair. That's how good the insurance actuaries are.
Yeah. And
So,
these car prices going up means your insurance coverage needs to go up. When before it may have been okay for your personal policy to have $30,000 because that'll cover 2 cars colliding with each other that are $10,000 each, and then a little bit extra. That's not the way that it is now. If you have a $90,000 truck, having a $100,000 limit, if you hit another $90,000 truck, that's
right.
that's going to be
That's a
your
very good
money out of
point.
pocket.
Yep.
Yeah.
Yep.
And that
So,
is the
so
price of
you
these
would
landscaping trucks.
you would recommend to business owners, right? Um, I'm hearing your recommendations so far, so I want to try and keep track of them. The first one is you don't want to go with an insurance company that's going to get you a quote in an hour or a day. You want somebody that's actually going to go through and look at your business. For example, when I said, went to go set up the glamping business that I have,
Mm-hmm.
and it took you a while to not just get everything together, and it didn't take you a while because you were lazy on it, but you look into all the ups and downs, what's going to work, what's the best coverage, because if you're a good insurance agent, you are trying to protect me.
You want your agent to be the one going with a fine-tooth comb through your business, not an auditor, and definitely not a claims adjuster. You don't want somebody that poking around your business that is not on your side. You want somebody like me, an agent and a broker, who will be getting you the best price early on that says, "Hey, you know what? Here's a policy that fits your business. Here's a few extensions we can get to cover your exact specific type of business, and here's a few exclusions that might save you a little bit of money because you're not really doing these things necessarily." So
Right.
there is a lot of customization in there where State Farm may say customization, oh, multi-line discount, multi-car policy. They're kind of cookie cutter throwing these things on there. You want these things, those dense insurance documents that you read that are 100, 300 pages in there. You want somebody preparing that document customized specifically to your business instead of an adjuster coming through, finding one thing in fine print and going, aha, here's why we'll deny your claim. You want to be the one that's familiar with those pages, and you need someone to
Right.
explain that to you.
Yeah. So can you explain to the listeners what you mean by exclusions? And maybe can you think of any examples that a landscaper might be able to get on, say, a GL, a general liability policy? Uh, just, I mean, I'm not asking him to say every landscaper will get this, but just things that you've come across, like this type company didn't need this, or so on and so forth.
Well, yes,
Is
the you have your base
Am I
policies
putting you
for
on the spot? Because if I
no,
am, I
no,
certainly
no.
don't want to.
I do this every day, but
Okay.
you'll have your base policy for every type of business, whether you're a landscaper, restaurant, any type of thing like that, and then you'll have the extensions and endorsements that'll add to your policy that'll typically cost more, that will add extra things onto there, whether that's, hey, I'm a landscaper who has my computer, I need to have a $10,000 coverage for having this in there, having specialty pieces of equipment. You need to add those things onto there. Exclusions are having that base policy and taking things out of there. Exclusions either reduce your price or make the business, a word we use is appetizing, more appetizing to an insurance carrier, to a company nationwide, State Farm, Allstate, where they say, hey, if we're willing to kind of poke these Swiss cheese holes in the policy, we're willing to take your business on. And that could be a good thing sometimes to reduce price and remove coverage that you don't need, but can also be a bad thing. There's one called CG 2294 that is very common in businesses that use subcontractors, where you'll have your policy, and CG 2294 says this policy does not cover any work done by your subcontractors. And some
Oh,
landscapers might be hearing it and they go, whoa, all of my work is done by subcontractors. I can't have that in there. While some people may say, hey, that's great for me because I don't use any subcontractors at all. Some people listening to this right now might have that in their policy. It's just two letters and four numbers. It's on some page. It's buried in there. A lot of agents will throw that in there to go, hey, you know what? Now my policy is $1,000 less than the guy down the road. Isn't that
Right.
great? Don't you love this? And they look at their limits and they go, $1 million limit here, $1 million limit there. What's the difference? Let's sign up for this. Then come claims time, the claims person, they'll look for that specifically. They'll find that page and go, you see this right here? This means that it's not covered. He's your subcontractor. That means you have no coverage for that. And it's a closed book. And what appeals process can you have in that regard to say, I didn't know that was in there? Well, they're going to say, you should have read your policy.
Should have
You
read
you should
your,
have,
yep.
yeah,
Caveat emptor.
yeah.
So then it begs the question, right? Because I know that the person this is pertinent to is listening right now. That's CG 2294. Is that what you
Hmm.
said?
Yep.
Is there commonality in that between the United States and Canada?
That's a good question. I do have a lot of international clients. I don't think that that's common in there. That is a common one for all carriers here in the United States. I have three or four clients in Canada. I have a few spread out across the globe, maybe a dozen or two. That is a good question. I don't want to tell everybody that I instantly know everything. That's something that I would look up, that I would go
Right.
check into. But that removal coverage for subcontractors is something that is in Canada. I have a landscaper that's in Australia that has that in there. I don't think it's called CG 2294, but that is industry standard, at least here in America. But that type of clause is world standard. So it's something that you need to look into.
Right. Okay. So it can get confusing, right? Because, you could have a 30 or 40 page insurance document, or like you said, it could be three or 400. I mean, I do remember as the years went on, my documents kept getting thicker and thicker, when it came time to renewing my insurance. Um, and but we are cost driven, right? Always, and not just in business and in life. A lot of people make their decisions based on the dollar value that they're seeing. How do we, not knowing the insurance industry, shop the right broker that's going to do like you have done for me? Right. Yeah, my benefit is the reason that I know working with you, there were two, right? I got a referral to you through one of my friends, but also I've been in business for so long that I can tell by the way that you talk that you actually look at more than like some of the insurance agents I've dealt with in the past.
Yeah.
So I have experience, right? But a lot of my listeners, they're younger, right? So they're not going to have that world experience. And guys, look, I will answer all sorts of questions for you. Do not call me asking me if this is a good insurance agent or that. I don't know enough about insurance. I always rely on people like Duncan to tell me. But like I said, you can call me about anything else. Just don't ask me about insurance because I really don't know.
Yeah.
Um,
Call me.
yeah, but how can they know that? Well, I've got a good relationship with my broker, but maybe your broker doesn't really have your best interest at heart.
That's a huge pitfall. Two big headlines there. One, in a lot of things, you get what you pay for. So it's something where they're not needlessly charging you more and more and more. I don't even make those decisions myself. That's up to underwriters and algorithms. It is geared towards your business. So you do get what you pay for. The quickie insurance thing now, where you can just go in there and some AI does it for you, but it asks you five questions. That is not going to fit your business because your business is unique. That's something where you don't want to just get the lowest price. The other headline is that who nobody obviously would pay extra money for identical coverage, but these big businesses that you hear these names of, State Farm, Nationwide, Liberty Mutual, they're competing with each other. So there's no way that they're going to charge identical services for different prices because they would just be out of business. They're smarter than that. They're savvy and clever and come claim time, they want to retain their money as much as possible, but they're
Right.
not needlessly inflating these things because they have to compete in the same marketplace with each other. So if your policy is $1,000 more expensive than the guy down the road, and he goes, "Hey, I have this great guy that you just got to deal with," you may want to look at his policy than look at the guy, because a great relationship's great. We have a great relationship here. But if your butcher's selling you tainted meat and he's your brother-in-law and he's the best guy you ever met, you're not going to risk your health for that. And the same thing happens with your insurance. You're not going to risk throwing away years of your work, all of your savings, your entire life because you like the guy. That's just
Right.
not the way that it works.
Right. Well,
It's
and
really
right.
important to dig in there.
Yep. So, okay. So I want to pivot to work comp,
Okay.
right? So I want to I know you said that this is your specialty,
Mhm.
as they say in England. They got that extra I don't know why. But uh I I'm going to start with a story, right?
Okay.
Why for my listeners, why it is so important that you make sure you have work comp. Okay. I'm going to a bid. I'm with my assistant at that point. I get a phone call. It's one of my crews, and it's the crew leader, and he's telling me that he goes, so and so just cut his foot off with the lawnmower. And I'm like, what? And I'm like, oh, is this a joke? No. And I'm like, did you call 911? No, I called you. Okay, hang up the phone, call 911. What job are you at? And so I headed over there. Um, the mower got stuck, turning in a circle, 360 degrees, kept going. This guy thought he would jump in there and turn the key off and it would stop the mower. He wasn't quick enough, lost his footing. The mower just pivoted around and took the whole top off his foot. Um, long recovery process, multiple surgeries. And on top of that, when everything was done, the insurance company gave him a hefty chunk of money, not as oh, we're sorry this happened to you, because that's not how work comp works, but put this in a bank somewhere because you will need 5 more surgeries in your life if you live the average age of someone with your health.
Yes. It's there is no pain and suffering payments, like you said, when it comes to workers' comp. That's not what it's for. It does lead to disability. It's how long you're out of work, how much you were getting paid for, how much you should get paid, and your medical bills. It is not a lottery. Nobody's going to go, "Hey, you know what? I want to make a little bit of money. Let me injure myself here." There are fraudulent claims. There is stuff where the system doesn't work the way it's supposed to, but the point of workers' comp is to protect you from things that no other policy does. It's not a normal health, it's not a business health insurance policy. I sell business health insurance policies to owners that say I want to offer health insurance to my guys. That's not what workers' comp is. Workers' comp is for accidents in the line of duty in your work that prevents you from working now and possibly forever. So that's something that you need to consider. People don't think, "Oh, I'm going to go into work today and it'll be the last day that I work for 2 years." Nobody thinks that way.
Right.
It's these accidental injuries, this unforeseen stuff, and it is this tiny chunk out of your overhead that'll pay for just the peace of mind alone, but your ability to go, "Hey, I have these guys on site doing dangerous work, working with equipment that could injure or kill, and I need to take the responsibility as a business owner to look out for my guys. I care about them." And sole proprietors, look out for yourself. It's
Yeah.
something where when you're there by yourself and you go, "I really should have another guy on this job. I really shouldn't be doing this. I should have somebody looking out to make sure this is okay. This job would be a lot shorter if I had another guy. So I'm gonna work a little bit later when it's dark and I can't see things and I may step in a hole and snap my ankle, and that extra hour of work after the sun went down isn't worth you being out of work for 3 months, 6 months, and having no coverage. Being a sole proprietor doesn't make you immune to accidents.
No, no, you're right. And being, a sole proprietor, and you're out of work, that income that's coming in is not going to be the full income that you could have earned. I think that what the long-term disability and short-term are like 50 and 60% of whatever your income was. Now, does the work comp will pay uh, wages if you are out of work,
Yeah, loss of income. Yep.
but they don't pay the full amount.
A
And
lot of policies will. A lot of policies
okay,
will for that. For
is
sole
that a new
proprietors,
change?
For sole proprietors, it is a little bit different because there is no oversight of you being there by yourself. So that typically won't. But for other employees, or if you're a bigger company, it will. It is
Okay.
something where they'll say up to 12 months. Yep, every dime that you would have been paid. That's why we ask you those probing questions. That's why you don't go online and they say, "Oh, here's what we're doing." You talk to somebody and they say, "How much are you paying yourself? How much is disbursements? How much is W-2 payroll?" So that you can look at these things and go, here's how much I'm actually going to be getting because that's 100% of what I would be earning versus, oh, this is what I skim off my business at the end of the year for tax purposes and stuff like that. So there
Right.
is nuance to it. That's one of the reasons that you don't get those quickie next day type things.
Okay. So now let's talk about, the overhead and reporting side of work comp. I cover this occasionally when I'm writing blogs and articles, but the payments for your work comp insurance are actually broken into two parts. There's the policy itself, right, which is a set fee, and then on top of that is the rate times the number of hours that the employees work during that calendar year that they're tracking it.
Mhm.
Am I right so far? Right? Just to,
Yes, the rate is basically the majority of it. That you can
right,
almost think of it as that entirely. The base rate will be very insignificant compared to everything else.
right. But just for accounting purposes, when you're doing your planning, folks,
Yeah.
again, I want to say you take that base rate and move it into your overhead, right?
Mhm.
That can be amortized over the entire year. However, the rate that is being charged per employee, let me tell you typically how it, every time that, I get set to, pay my work comp. Dan, what are your estimated hours for this year? And I might say, well, I got 9 employees. I'm anticipating going up to 12 by July, and it'll stay that way for the rest of the year. I do all the math. I come up with however many hours it is, and I tell them. And let's just say, for simple sake, we'll say, 14,000 hours, right? I know
Yeah.
that's less than what those people would be doing, but I'm just going to
Yeah.
14,000 hours. What they're going to do is they're going to say, okay, well, then your insurance is what's the rate for landscape? Strictly landscaping, not tree. It's is it 7 an hour now?
It's gone up from there. It's eight and
Okay.
a half is what I'm
Eight and a
familiar
half.
with. Yeah.
Okay. So 14,000 hours times 8.5. That's what they're going to charge you. They say that's what your policy is going to be for that year. But you don't want to think about that, 8.5 times 14,000, which, whatever that is, it's a hell of a lot of money. It's in the hundreds of thousands. You need to just keep in mind that 8.5. That's now part of the overhead burden for your employees. And when you're calculating your price, that 8.5 is what you need to know. You want to make sure that the minute your insurance agent tells you that hey, your rate because so and so chopped his foot off has now jumped to 8.75, you better be adjusting all your pricing based on that. Because at the end of the year, when you're super successful putting all your sales together and suddenly now you had to hire 20 people and your hours are at 30,000 for the year, the insurance agency is not going to say, oh well, you can owe us the other 16,000. They're going to come in and audit your books, and they're going to want that 16,000 within
Yeah.
30 days, I think it is.
It is, and that lump sum will come right when your next payment for your next year is coming. So it's not just that, it's whatever your minimum down payment for that next thing, like 25%, 10% sometimes, but more often than not, 25% will be added at the same time as that additional premium that comes as part of that audit. And another thing, not to scare everybody all at the same time, if you're using these subcontractors, uninsured subs get picked up by a workers' comp policy. So
Mhm.
insured subs that say, "Hey, here's my certificate, boss. Everything's all good." If you check certificates once a year, some of these subs may not be as brother-in-law trusty as you want them to be. They can get a policy, keep it for 1 month,
Can do.
cancel it,
Yep.
and then you're on the hook for 11 months of pay for this employee. That gets picked up by your workers' comp, whether you like it or not, because when they audit your books, they take that in as W-2 payroll, and you're paying that full price on it. So you may say, hey, I have $200,000 in payroll that
Right.
jumps to 475 overnight.
So let's pause for a second.
Go
Let's
ahead.
take that theoretical, right? So it's January. I got my sub. And I tell them, I need your W-9. I need your insurance. They give me the insurance. Record a copy of it. I put it in the vendor file for them. I'm feeling all great. Go ahead and work the rest of the year. Then heaven forbid I get to the end of the year, and now I'm getting my audit like the following January. Is the is the auditor going to like pull up this person and go, okay, he had insurance in January. Are they actually going to look and see if that policy is still active for the rest of last year?
Yes, but like
Okay.
like I said before, you're gonna want to be your own adjuster. You want to get out in front of
Well,
these things
that's why I wanted
before
to
they
ask
do.
that story because that's why I wanted to ask that question so
Yeah.
that they understand your due diligence doesn't end in January or when you start your work with this contractor. It's your due diligence is having a quarterly or bi-monthly policy to tell people to resubmit their
I
info.
think quarterly's fair without being too burdensome on your guys because you don't want to be the guy that is the paper pusher where they're like, hey, I just want to work. You're making this too burdensome. It doesn't
Right.
need to be monthly. Bi-monthly can be okay. Quarterly is minimum because
Okay.
you don't you want to check those policy numbers because if they cancel and renew every quarter, that's a lot of hurdles for them to jump through. But if their policies number is different every quarter, you have a guy that is putting you at huge risk. That's something that you don't want to be doing
Right.
and not just quarterly, but check where their dates are. Because if you start in January, their policy may start in January, but their policy also may start in July. So maybe they keep it for January through July. And then they say, oops, I forgot it. I let it lapse. And even though
Right.
you're doing quarterly checks, it could be a month or two. And you may even just take his word on it where he's like, my printer didn't have any ink. I can't send it to you. My email's not working. You need to be checking your certificates, your COIs, their expiration dates on there and following up with them to say, hey, I know I normally check this quarterly, but you're going to expire a month after my quarterly check. I need you to send me that renewal now, your certificate for your next policy.
Okay. So then that brings the question because I dealt with subs, um, and plus had my own team. With some of my subs, they were work comp exempt solo operators.
Mhm.
Okay. Um, that's fine. They have an accident when they're on one of my jobs, even though they're work comp solo exempt, work comp exempt as the solo operator. Am I good?
It's That's not the way that I experience it now. The
Okay.
sole proprietors are the GCs. They are the head guys. If you are just a guy with a lawnmower and you're getting subcontracted out to multiple companies, you need to have your own policy. It could be something as cheap as $500 a year for $1 million coverage, and you can hand that to any company and they'd be proud to have you on there. Is that worth you having lawyers coming after you for this? Because it's not just the people that get injured, the one side of it, it's the GC that you're working for. He's going to say, hey, they're coming down on me, I have to sue you or I'm going out of business, and
Right.
then that relationship gets strained. There is a whole mess of worms that can get opened up when you're doing that. That's
Yep.
not the way that I've experienced it, but you don't want to dabble in that. We if you call me, we can dig into that and see if you can be exempt. I'm in Maryland. Maryland is typically not exempt for that type of stuff. I know Virginia can be.
Yeah, well, this
Um,
this was when I was down in Florida, that some of the subs that worked for me, they were the way the law was written down there, if they were solo operators or the owner of a company fit within certain criteria, even if they had a team, the owner himself could be exempt. So, and but at the time I had been advised, yeah, that's fine. You don't need to worry about those people. But I also know that the insurance laws change. Right.
Yes.
So,
And state to state is very different. It's
yes.
almost the Wild West when it comes to workers' comp, when it comes state to state. Florida will be more lax as you get more and more north. It is stricter, and then there's a lot of laws that interfere with each other because when people cross state lines, just being where we are in the Mid-Atlantic, Virginia, DC, and Maryland couldn't be more different from each other with the way that this type of stuff works. So
Right.
any owner can be excluded from a policy. You can exclude it, and the owner will typically be making the most money or is often making the most money. So you can get huge savings on that. And if you're an owner who's a project manager who sits in an office all day, not only are you going to be able to exclude yourself, those rates we were talking about, that 8.5, somebody who sits in an office might just be three. That you'll be like
Yes.
a third of
Yes.
the price. So
Yes.
so you're
But
getting a
you're,
big discount.
yeah,
Go ahead.
your tree person's going to be like, I
Yeah.
think it's 17 or something like that. It was,
Yeah, they're
ridiculous.
like roofers. Those are the worst in the industry. People that are, if you're higher risk, you're going to pay more.
And this is the other thing. So, um, you want to make sure that you classify your team properly. Like Duncan saying, your office person is going to be just a low rate. What's the worst that can happen? A paper cut or the roof collapses on them in the building. Um, but your tree people are at higher risk. Now,
Yeah.
say I got somebody that does tree work. I did some tree work, but usually I would sub it out. But I would only do tree work that was within the limits of the height, right? That my insurance told me I could put my people at. But let's say I decided that I wanted to do mixed tree work with my landscaping and say I've got, 10 hours a week of tree work. Am I able to classify those people 10 hours at this rate and, 30 hours at the less expensive rate, or am I paying them that high rate the entire week?
There is no one answer for that.
Okay.
So the way that that works is if it's one person that's doing those jobs, you'll be classified as the highest rate, bar none. That's the way they do it. If you have a tree guy, he'll be classified as that rate, and then you can have somebody like your office workers that says, "Hey, these three guys never go up above one story. These guys are always two boots on the ground." And there's a lot of different landscaping classes that say, hey, we do masonry work. That'll be a little bit more. They do electrical work with landscaping. That'll be a little bit more. But if it's an individual, they're always rated by whatever the highest is, whatever the worst rate is for you, whatever is the most expensive rate. That's how they rate you. But you can batch it out based on individuals, but any singular individual will be rated as the worst thing they do all year. They pick up a
Oh,
hammer on a roof, and then you're a roofer.
right.
That's just the way it works.
Yep. I always found it fascinating. And I mean, when I sat down and thought about it, I could understand why. But I always thought that it was funny that my lawn mowing guy was a lower rate than my irrigation guy. I'm like, the irrigation guy's just working on pipe and low voltage wiring. And no, because they're digging those trenches through the ground, and heaven forbid they hit
Yeah,
electrical lines or,
gas line. Yeah,
gas, So,
there's I know that for many classes there's hundreds of points that go into these algorithms where they reevaluate them every year based on zip code, age of the people working, familiarity with the work experience, and these rates go up and down every year. They'll say these 10 are going up, these 10 are going down based on experience, but that's because hey, last year we had 100 irrigation guys get injured in this, so that's why it's going to go up. So that may have been the way it is before. 10 years from now, it may flip flop. So it's something where you always want to be honest when you're doing insurance because, like I said before, that material misrepresentation, you
right.
trying to pull a fast one on your agent is only going to cost yourself because you could roll the dice with your business, but that's not why you're in business. You'd be a gambler if that's what you wanted to do if you're running the
So,
business.
I agree. And I do want to turn to a couple of other quick questions before we open the floor to see if there's any questions. The there's I do want to say and get your feedback on this. I feel that there's two different types of people viewing insurance. There is the person that says, I need to have this to protect what I own, help the people that work for me, protect the properties of the people that I'm working for. This is the right thing to do, and I want to make sure everything is buttoned up. And then there are the people who generally look at insurance as I'm being told I have to buy this. What's the bare minimum that I can get by with? And they don't really understand that they're, even if they're being forced to spend that money, right? Government like requiring auto insurance, why throw that money away buying a policy that doesn't achieve what it should?
You're making an investment in yourself. You need to change your mind. If that's the way that you see insurance is I'm required to have this. That's not the way I want it to be. You need to let other people's expertise guide you and govern you in that way to say, hey, what are my blind spots? What am I missing? What are my options? To say, like, put the buffet in front of me and let me see all the insurance out here. Because if you're a business owner and you do direct deposit, you have payroll systems, your employees have emails, and you go, I'm a landscaper. Why do I need cyber coverage? Because cyber is the fastest increasing claims that we see. It is going up leaps and bounds, and people are sending these phishing emails. You'll get an email. People can even duplicate exact emails right now. You go, I've seen this guy's email twice a week for the last 10 years, and he's telling me now his bank account changed. He needs a new direct deposit. Okay, I'll make that change. And then you're out tens of thousands of dollars. Cyber covers that. You'll get your money back. But you're
Right.
thinking, hey, I don't need cyber. I'm not some robot. No, that's not the way that it works. It's something where cyber affects everybody. You
Yeah.
you need to be asking your agent, hey, I need to put this in your hands, your expertise. You need to guide me. I've heard the term umbrella. Does that apply to me? Hey, does my personal auto cover this trailer? No, it won't. That's extra equipment. If it has a license plate on it, that's another vehicle. You need to
Yes.
be asking these questions and letting somebody give you that information rather than saying, I'm going to take the cheapest thing possible because while that does work out for the occasional person, are you going to gamble your entire business on you being that person?
Right.
That's not the way that
Well,
the people that grow, that's not the way it's going to work.
yeah, and unfortunately, and I mean, this is human nature, right? Um, it's never going to happen to us. I'm never going to die. I'm never going to have an accident. I'm never going to, chop off a, piece of my body or something like that. But you don't know. You don't
Yeah,
know. We always want to think that the worst thing couldn't happen to us. In 54 years, I've seen some awful, terrible things happen to some really good people.
yeah,
So you don't know. And so it's to me foolhardy not to at least take seriously, even if your mindset is I'm being forced to do this. Okay, you're being forced to do it, but at least make sure that the money you're paying is actually doing something instead of just, throwing it away on a crappy policy.
yeah.
I
Just because it's frustrating doesn't mean you should be ill-informed. You should at least
Right.
know what you're getting into and say,
Yeah.
I'm willing to personally take this risk to save this amount of money. And you go, wait a second, I'm saving $100 a year to take on 10 times as much risk. There's no way that's a good choice. I should invest a little bit more to make this. And that is what the great businessmen do is they ask the right questions.
Right.
They humble themselves and say, there's no way I can know everything about every industry. Help me out here. Let me at least see my options, and then I can make the informed decision of what I need to pick and where's the best place to ensure that. The
Right.
insurance industry changes every year. I need to do training every year constantly to stay up to date with this. If these landscapers did a bunch of training 10 years ago, then they haven't been keeping up with it. Things have changed recently.
Yeah.
There's OSHA compliance, there's a lot of laws that are changing. There's stuff that I need to stay up with so I can best inform people. It's not their job to do that. It's their job to ask me to help them with that.
Hmm. Yep. No, I agree. And before we pivot, I will say one more thing in support of what you're saying. My mindset was always, yes, sure, I want to get as much work done in a day as possible, but I will not uh, throw safety out the window to accomplish that.
Yeah, you could be
Right.
the most careful, prepared, educated person, and
And
equipment can break, weather can
I've
happen.
right and right. I had a guy take the top off his foot. I had another guy get bit by a brown recluse spider. I got knocked off a ladder and almost, got cut in half with a chainsaw in the process of it. Accidents happen no matter how careful you were. And I was, I was careful on that ladder. But unfortunately, the way that the tree had bowed when I cut it, it snapped back and went around in a whole big circle. There was no way that I could have even known. This was in a hurricane after a hurricane. So sometimes you're cutting and you think you're cutting the right way, and unfortunately, my point being though, you can be the most careful person in the world. You can say, I don't want an accident to happen. They still happen. They still happen. That's why they're
They
called
they happen when yeah, they
they're
happen when
not
you least
called
expect it.
plans, you know.
Yeah.
Okay. Let's quick talk about two things. Uh, Equipment insurance, if we can just briefly, right?
Yeah.
How's that good? That good, right? You say, uh, this happened to a buddy of mine. I went to bed, my trailer and truck and everything were in my driveway, and I woke up in the morning and they were gone.
So I imagine that was theft. I imagine that wasn't they were blown away.
No, yeah, they were stolen. Yeah,
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 that is a lot more common than people think because they say, "Hey, this is a good neighborhood. I have it moderately locked up. It's going to be more trouble than it's worth. I'll hear them being stolen." Fortunately, a lot of that stuff is recovered, but the time that you're out of business isn't just getting your tools back, isn't just replacing the tools. That's the cost to your business. So
yeah,
having theft is typically part of a general liability coverage. There are different equipment coverages. There's business personal property that'll be part of a business owner's policy or a package policy that's uh, connected with the general liability. But there's also something called inland marine that a lot of these landscapers they bring their materials from one place to another. Their whether that is actual like sod and mulch and stuff like that, or their skid steers, their mowers, their gasoline tanks, everything that
right.
comes along with it. If it's in motion, you need a specific policy called an inland marine policy to cover that because that is how that's covered. The inland marine refers to it was originally for like ships coming across the ocean, and
Right.
inland is because it's on land now. So if it's being transported, that's that coverage that you need. And people don't think they say, oh, you know what? I have a great general liability policy. I have a great theft policy. I have a great equipment coverage with business personal property. But if it's in motion, that is its own thing. And people hear that and they go, how is
And to
that
re
possible?
Right, and to reiterate that, that could be your lawnmowers. That
I,
could be,
yeah.
your like you said, the skidster, or your bobcats, any of that stuff that you're moving.
I
Okay.
looked out the worst claim that I had for a landscaper was when they had a rental vehicle. They didn't tie their trailer to it properly. They didn't hitch it properly because they weren't familiar with the hitch. It came undone.
Right.
It hit seven vehicles and it was around $400,000 for that. These people that are trying to get discount policies don't think, hey, you know what? I have a truck. I trust it. I know exactly how to hitch it up. But then one day you get a fender bender, you get a replacement vehicle for 2 days, and that's when it happens, is when you least expect it. So it's
Yep.
something where you really need to consider all of your options. And if you can't consider it, if you humble yourself, you ask somebody, hey, help me, dig into my policy with me, rather than trying to get the cheapest price just so I can bid on this project, just so I can get out there and work and do what I can and roll the dice every day.
Yep. And how about umbrella policies? Can you give a brief explanation on that?
I'm glad you mentioned that. It is one of those ones that when you hear it and you think about it, it kind of makes sense. But if you're not exposed to it, it doesn't. Umbrella policy, like an umbrella, goes over everything else. You need to have it specifically paired with that. So just getting an umbrella policy doesn't mean that it goes over your workers' comp and your general liability and your auto. You need to have it scheduled, what's called scheduling, but connected to those other policies because some carriers will say, yes, this goes over your general liability. No, it doesn't go over your business auto. Umbrella is the cheapest way, dollar for dollar, to get these increased limits. And the way contracts work now, they'll say you need to have 5 million combined, whether that's 2 million general liability or and plus a $3 million umbrella or 1 and 4 or however it comes together. But a lot of them are specifically saying we need you to have a $5 million umbrella in addition to a $2 million general liability because they know how these things interact, cross-pollinate, crisscross in their fine print because you need this in there. But an umbrella policy is the cheapest way to get higher limits for what you need. So you do need these policies, but it's nice to have something that is kind of a safety net beneath what's your initial protection of these other policies to
Right.
say, hey, I can't predict whether I'm going to have a $3 million loss in my auto, or a $3 million loss in my general liability, or a $3 million loss in my workers' comp, or a $3 million loss in my equipment. I need to have this umbrella policy to better cover me for that. And it's the cheapest way, dollar for dollar, to get that type of coverage. So it's something where if you don't have an umbrella policy and you're grossing over $1 million a year, you're making a mistake.
Okay. And so, another question that occurs to me is, um, would you feel, say, you got two people in front of you, their companies are exactly the same size, right? Same number of vehicles, same number of employees. One's an LLC, one's a corp. Would there be any difference in the insurance that you would offer them or require them or suggest that they carry?
Well, that's that a little bit of a mistake there that you already made. Very, very common is no two companies are the same. Whether it's the same number of employees, same number of gross, it doesn't work out that way. I'll have twin brothers that'll come to me and say, "Hey, you covered him, cover me too."
Right.
And we do the exact same business, the exact same state. This is the way it works, and it doesn't work out that way. So the answer to your question, no, it's not going to cover that identically. You do need that in there because there will be fine print that's geared towards that. We ask that question every time, every business to say, are you an LLC? Are you an S corp? Are you a different type of incorporated? And we cover everything from 501(c)(3) nonprofits to big corporations that have nested hierarchies.
Okay, so then does the corporate structure inform like the pricing?
It does. It does. There is no one master plan to say, hey, LLCs are always cheaper. There is nothing like that. But like we were talking about before with disbursements, if you're a W-2 of your own company versus you're the owner operator that's just only taking merely disbursements at the end of it, your workers'
Right.
comp policy will affect you drastically different. So you need to have that structured properly. I won't tell people this is the way you need to run your business. I'll ask them and say, how are you running your business? Here's the best that I can do for you right now. And if they want risk advisor, I can help consult on that. I won't control the way they do it, but I'll
Right.
best customize their policy to the way they are now and give them their options to say, hey, if this one thing changed, here's the better way to protect yourself.
Right. Okay. So I'll turn to, in the group right now before I turn to YouTube. Does anybody on Zoom have a question? If they do, just go ahead and type it in the chat and I will keep an eye on that.
Yeah, I don't have it pulled up, so if you read it to me, I'll be happy
Yeah,
to
no,
answer
I
any
will.
questions.
I
Okay.
will. Yeah. And so I'll see if there's anything in there. And then on the YouTube, I sound like an old person. On the YouTube, like my dad used to say, on the internet, the Facebook was the thing he used to say.
If we're waiting on that, I can answer a question that a lot of people think about.
Sure.
Are lapses. It's something where people
Yeah.
think, hey, this is my slow season. I can let my policy lapse for a little while and pick that
Right.
up. That is when accidents happen the majority of the time, is when you least expect them, is when you're letting your guard down. You're saying, hey, you know what? Normally we do 30 jobs a month. I'm doing 3 jobs a month during these winter months because it's all interior landscaping, it's all rooftop stuff, it's all stuff like that. I'm going to let this lapse to save myself a big chunk of money because hey, it's a net gain for me. Then you have a claim. Then you have a potential for losing out on everything you've built. You'll miss your next good season if you have that risk in there. So lapses are always something where you
And
don't want to have it. You can call your agent and say to them, hey, these are my slow months. Can I reduce my limits for this? That's not something I typically recommend. I will counsel people on that, but lowering your limits versus having a lapse, that one's a no-brainer. Hopefully
oh
people
yeah.
people realize that.
Well, and you brought up the very valid point. Um, so you said, accidents usually will happen when you let your guard down, right? Your slower months, you're less careful, or you're thinking nothing's going to happen. Which is why the report had come out back when I was a teenager that most accidents happen within a mile of home.
Yep.
Why? Because you're like, oh, I'm almost home. So you
Yeah.
stop caring. You start thinking about what am I going to cook for dinner? What am I going to, so it
You
is.
think you're familiar with the roads? Yeah,
Right.
there's so many reasons for that.
Right.
It's
Right.
90% of accidents happen within a mile of home because
Right.
people are most commonly there, but that's when they're most tired. They're just at the end of their rope mentally, and they think they're going to be in their garage soon. Everything will be done, and yeah,
Okay. Here's a good question from YouTube. Okay. Can training, okay, yeah, can training manuals and training days actually help lower your insurance? That's a good question.
that is a great question. And the answer is yes. So I'm a broker. I have about 30 standard companies that I work with, these big names that you know, Nationwide, Liberty Mutual, Geico, those companies. And then there's the surplus market, which is for several different reasons, you'll go to surplus market, whether you're a unique risk, you're a business that's just starting off. Those will typically have more exclusions, higher prices, less coverage. And people will ask me, "Hey, I've been in business for 2 years, 3 years. Do you think I'm ready to go into the standard market?" And then I'll go to the standard market carriers and they go, they've had no losses. They seem like they know what they're doing. They're experienced. Have them send us their training manual and we'll try and
Right.
get them in here. And then I say to them, send me your training manual. And they go, my what?
What? Right. Yep.
So it's more about having one versus not having one. You do want to cover your bases with that, but they're so familiar with these businesses, they'll have specific wording, verbiage, clauses that they need in there, whether that's risk
So,
transfer, specific materials. Go ahead. What are you going to say?
well, I was just, it's kind of on a different topic, but it comes back to a conversation you and I had last year with that property, that I bought where, I had told you, this is my intention, what I'm going to do with it. It's got a deer stand on it, but I've already written a policy that nobody's allowed to use the deer stand. I was like already like a light year ahead of you,
Hmm.
because I knew that question was going to come up from the insurance people,
Yeah.
that there's like a no hunting policy while you're staying at this property. Um, so the more experienced people learned that, that these are the questions that the insurance industry is going to ask. It's the training manual, the policy manual, all these things. They want to see documentation.
The
They
two
really,
most common are the training manual and your subcontractor agreement. You want your subcontractor agreement to have robust language in there to protect you because you're not going to scare off serious subs by having language in there that says, "Hey, this is risk transfer. Hey, this is primary non-contributory." And if you don't know those words, then you,
so
you we
then
need to have a talk.
it leads me to, the other thing that I'm constantly talking about. So if they're looking at that robust subcontractor agreement, the insurance agency is looking at it. They're going to be able to tell if you wrote that off Chat GPT or borrowed it from Joe, or if you had a real lawyer write it.
Yes, absolutely, because it's not just the tiny nuts and bolts in there. It needs to stand as its own document. So there are 4 or 5 clauses where they'll say, "Hey, he needs to put these in there." But if it's something that is worthless, then they're not even going to consider it a subcontracting agreement at all. And it's one thing to say we will use this one moving forward, but a lot of times they'll say we need one executed 12 months ago. We need to
Right,
have one that has a date on it that says they've been having this for a very long time. Because a lot of times everybody will have all their ducks in a row except that one subcontractor agreement, and then the insurance carrier will say, "All right, we'll quote you next year. Come back to us next year. Start using this today." And they
right.
need to do that, and then it does end up a Cinderella story. They do use that; it does protect them, it does work out, and the next year they're in the standard market and they have a great price and great coverage.
So we are at an hour and 2 minutes already. So we're gonna have to cut it off. This went by very fast, and it's been very informative. So to all my viewers in the present and in the future who will be seeing this is Duncan Gregory again speaking with us, and he is available to help you with any of your insurance needs. He's going to drop his contact information into the free Facebook group today, if you want to do it that way instead of doing it here in the chat. Once I post the video into the free Facebook group, if you just want to go ahead and put your contact information in there, Duncan.
Absolutely.
Anybody needs help, give him a call. He's really good. He's also pleasant to talk to on the phone. Just if you're not talking about insurance. To everybody on YouTube, same thing. Once this finishes and it's processed from live into storage, I will take Duncan's contact information and put it in there for you. If you're watching and you're not part of the Landscaping Business Growth Hub, I invite you to join. My name is Dan Jones, Jones Business Management and Growth Consultants. I have over 20 years experience in the landscaping and hardscaping industry. I now mentor and consult for landscapers specifically and the home service business industries generally on growth and optimization. So if you are looking for some help, you can find me at danjonesconsulting.com or through my YouTube page. Or please, if you're a landscaper, come join our group. We give out free tips and advice and help you grow your business. And thank you very much. And Duncan, thank you again. And I'll be talking to you, I'm sure, in the next day or two.
Yep. Thank you so much, Dan. And guys, don't be shy. My advice is free. Please call me. I'm happy to help out.
Okay. Fantastic. Thank you. You have a good night, man.
Thanks, Dan.
Yep. Bye.